All right, we're going to go ahead and kick things off here. Thank you so much for joining us today. I'm Jake Alexander from Action Accounting, and I'm excited to talk to you, spend a little bit of time here with you, and talk about some year-end tax planning tips. Appreciate you taking some time out of your day. Our goal here is always to offer as much value and provide as much value to you for taking some time out of your day to join us. And so we're going to do that, and we're going to get started here. We're going to jump right into it. Always start with a little bit of an overview, somewhat of an agenda for today's meeting. Always like to set really clear expectations. That way everybody knows what to expect. And so this meeting we have scheduled for an hour here today. Usually the presentation portion will go 35 minutes or so, just depending on how many questions we have. We always build in time at the time for Q&A at the end, but we're going to get started. Little introduction about me and Action Accounting. If you're already a client of ours, then obviously you know who I am and you know who the company is. But I always like to make sure I'm just not some perfect stranger up here talking to you guys. So at the end of the day, this presentation is not about me, but we will just do a little bit of a quick intro. So I'm not some perfect stranger up here talking to everybody. Then we're going to start on the basics, right? To me, good tax planning really starts with the basics. We're going to spend a little bit of time talking about organization, preparation, and most importantly, communication. So we're going to dive in there, and that's going to get us started talking about the basics. From there, we're going to dive into our tax planning strategies. We're going to hit this from two different angles. So we're going to talk about the individual side, and we're going to talk about the business side. At the end of the day, the tax code is written for business owners, and there's a specific reason for that. So a lot of these tax planning strategies will revolve around owning a business, but if you don't, that's okay. We're going to talk about all the strategies or some of the strategies that you could do if you're not a business owner as well. And so we are going to talk a little bit about the individual side and then a little bit about the business side. And then last but certainly not least, we always leave time for Q&A at the end. We want to ask your questions. If you're out there listening or even watching the recording of this afterwards, you've probably realized this isn't the typical version of Zoom. This is the webinar version. So this isn't the typical one where everyone's faces come up and you can unmute or turn your video on and ask questions. We do that for a reason. If anyone has ever been on a Zoom meeting with 10 or 15 people and a few different of them try to start talking at the same time, it can quickly go off the rails, and we don't want that to happen. So in respect of everyone's time, we want to keep it as organized as possible. That's why we do the webinar version. I say all that to say we still do want to interact with you. We want to hear your questions during the presentation, and then most importantly at the end, because we got plenty of time built in for it. The way you do that is there's a Q&A box. So down at the bottom of your screen, you probably will see the chat box like you do in a regular Zoom meeting. If you try to type in there, it'll probably say that the chat is disabled because you got to use the Q&A box. And so you may have to go to the little three dots on the right hand side that says more. From there, it should come up Q&A, and you type in your questions right there. And so if you're out there listening right now, just find that Q&A box, type in your first name and the city that you're from so that we know, everybody knows how to use it. And then I also want to encourage everyone to interact as much as possible because we do want to answer your questions. I could sit up here and I could talk about this stuff all day long, don't get me wrong, but at the end of the day, we want to hear from you and we want to make this as valuable as possible. So find that Q&A box, type in there your first name and type in where you're from. So we know everyone knows how to do that. And then we'll jump right in there. Julie from Tarpon Springs. All right. Ron from South Pasadena. Welcome. Thank you. We got Kevin from Tampa. Kevin Taylor. Hey, talked to you a few times here lately. That's good stuff. Thanks for tuning in. So everyone knows how to use it. Type your questions in there. If they come up during the presentation, feel free to jump in, or you can save them to the end. We're going to have plenty of time for Q&A at the end there too. And so let's jump right into it. Just quick introduction on me. Like I said, so I'm not some perfect stranger. Up here talking to you guys, I'm Jake Alexander. Action Accounting is the name of our company. I've been around since 2016. At this point, we have 4 major departments in our company. We have a bookkeeping department where we create financial statements for business owners, literally just categorizing and reconciling transactions so business owners can essentially get financial statements at the end of each month. A big part of what we do there is teaching business owners how to read those financial statements. So it's not a matter of just getting a P&L or getting a balance sheet. It's what are we using that information for? How do we really start to break down how much money's coming into your business, how much money's going out of your business, help them understand cash flow and that sort of stuff. And that's what the bookkeeping department does. We have a tax preparation department. We're in that department focused on filing timely and compliant tax returns. So filing tax returns for the businesses themselves and all the respective individual owners of the businesses as well. The tax planning department, it's kind of like when you have kids, you're not supposed to have a favorite, right? But everyone kind of leans a little bit towards a favorite. The tax planning department would be that for mine and our business, because that's where we get to do stuff like this. We get to talk about proactive tax strategies. We get to help people save money, and we get to help people legally and morally pay the least amount of taxes as possible. And so that's what we're going to be talking about today, are some of those year-end tax savings tips that you can employ to save you a bunch of money. And then we just recently launched our business consulting division 2. Really exciting here. We can help business owners put systems and processes in place in their business to help them turn it into an actual business. So if anyone ever out there needs help with that or any of those services, you can always find us at our website, which is actionaccountingusa.com, or you can follow us on social media, all of the big channels there. So that's just a little bit about me. I promise I won't talk about me. The whole meeting here will go into the actual stuff that we're here to talk about, which is tax planning year-end tips. And so we'll start with the basics. And this is too, we're real big on the basics around here, because if we don't get a good foundation and a good understanding of how all of this stuff works, it's not going to be as effective as it could be. And so I'm going to take just a few minutes here and really set a good foundation. It really starts with organization. And our biggest recommendation to clients is to get organized now. Let's not wait till April 13th of next year. Let's not wait till October 12th or October 13th of next year. Let's start getting organized now, whether that means you have a folder on your computer where you keep all of this stuff. If you have an actual file cabinet, like you still have a physical file cabinet that you want to keep all these documents in so you keep everything organized, that's fine too. What we recommend is our client portal. So if you are a client of ours, you should already have a client portal, which you can access from our website. I'm going to bring this up a couple different times here. So I just want to make sure everyone knows how to use that. But here on our website, which is actionaccountingusa.com, right on the top right, you have a client portal, and you can be very organized in there. You can have different folders for every tax year. If you have multiple business profiles or individual profiles, you can break them all down. It gets very fancy how organized you can get in there. And so we would recommend using that client portal as much as possible, so you can get as organized as possible. And so the whole idea here is really to start to have a good understanding of all of the dynamics that go into your tax situation, right? Everyone's situation is totally different. And that's what makes this truly exciting for us, is everyone's situation is a little bit different. So no two scenarios are the same. No two recommendations are exactly the same. And so what we really want to do before the end of the year is get a good understanding of all of the dynamics that are going in to your tax return. And so if you're a W-2 employee, then that means you're going to get a W-2 from your employer at the end of the year, right? There's not much you have to do. By law, they're supposed to send those out by January 31st of every year. So no later than the first or second week of January, you should be getting those W-2s in the mail. If you're a business owner, we need a good understanding of how much income and how much losses you had through the year, so we can understand your net profit. You want to start putting that stuff together now. We don't want to wait till next year. We don't want to wait till the last minute. We want to do our best to be as organized as possible on that throughout the year. You have investment income, right? This is something that's become exceedingly more and more popular with the younger generation in the last few years. So if you're 25 years old and you made $10 million buying and selling Bitcoin this year, that's amazing. But we need to start understanding, how much income do we have? How many losses do we have? What are our net numbers? We need to start getting organized so we can be as organized as possible when it comes time to get ready to file those taxes. If you had rental properties, we're going to need to understand how much income you had, how much you spent on expenses there, the depreciation, or all those sorts of things. We're going to be able to help you out with that, of course, but you want to start getting these things together. And this is really just from an overall organization standpoint. You want to start thinking about these things now, as opposed to next year or extension time towards the end of next year. And then major life changes. This is a big one too. So if you got married, or if you got divorced, or if you had a child, or you have a situation where maybe one year you claim a child on your tax return, and this year we're not going to be claiming that child. These are the types of things we need to wrap our head around sooner than later, and really just start to paint an overall picture of what we have going on and what the situation looks like. And so we want to get organized from there. We want to be prepared. Are you an early filer? Are you an extension filer? We love both. We love clients who are super organized, and the day that filing season opens, they're ready to give us all their stuff. Or a lot of times they've already given us all their stuff, but they're ready to file the first day humanly possible and get everything moving. We've also got clients who love to do extensions. They go on extension every year. So it's really a personal preference of how you want to do that. And we can work with both, but just having an idea of, are we going to be filing earlier in the year? Are we going to be getting ready for all this stuff, getting a little more serious around the summertime? Or are you the kind of person who likes to, we work with everybody. Even if you like to wait to the last minute, we can always accommodate and get that stuff going. And so, and our support team is going to be reaching out to people with engagement letters. And then we have a questionnaire too that goes out to all of our clients that's going to ask you some of these questions, right? Do you have rental income? Do you have investment income? Do you prefer to file now, or are you more of an extension filer? Just so we can communicate with you well and understand what's important to you. And most importantly, so we can balance and utilize our resources as much as possible from like a time and resources standpoint. And we know exactly how much work to expect coming in and how much we can get done for you. And so commitment emails will start going out in January. If you're an existing client, we just ask that you commit to us for the upcoming season. Those will start coming out from the support team. And that's really just some of the basics of like getting organized, making sure we're prepared, and most importantly, making sure we communicate well. That's the biggest thing that we thrive ourselves on over here, is our ability to communicate. We try to give our clients access to us through doing events like this once a month, and then through our support team. We have a number you can call anytime during business hours. And then we've got our support email, which is support@actionaccountingusa.com, that you can always email into as well. And so that's just a little bit of the basics. From there, let's jump into the employee side, or sorry, it's the individual side. And a lot of this has to do with like employee benefits. So if you're a W-2 employee, there are some things you can do to save money on taxes. There's not nearly as much as if you were a business owner, but there are some things out there. And so we'll jump right into those. One of the things you want to look at are your retirement plan contributions. A lot of people don't realize you can max those out. You're not just limited at like the 3% or the 6% or whatever it is that your company offers or matches. As an employee of a company, you can actually max that out at $23,000 per year. So if you're having a very successful year, that's great. That also means you're probably going to be in a higher tax bracket than what you're used to or than what you have been before. So putting money into that retirement plan, it's going to be now money you're not paying taxes on in the current year, then it's in your retirement plan, growing for you tax-free in retirement. So if you work somewhere and they don't offer a 401k, you could also do like a traditional IRA too. With those, you can put up to $7,000 per year into those accounts. And that's going to be a great tax savings for you this year. And then you're also going to have money in that account growing for retirement. We want to look at harvesting capital gains. So this is a way to offset gains with losses through stock transactions, items that we're buying and selling. And so this is most common in the world of stocks. If you have a financial planner that you're working with, more than likely they're already exercising this strategy for you. And you're just going to get a 1099 from them at the end of the year. If you have had a conversation with them, I would bring it up and ask them, hey, is there any opportunity for us to harvest some capital gains to exhibit some tax loss harvesting? Because that's always a great way to save a few bucks for the end of the year. This really goes to all of our cryptocurrency people out there, where cryptocurrency, although getting a lot more regulated and a lot more official, is still somewhat of the Wild West. And so if you're out there and you're investing in crypto, I think that's amazing, especially if you're making a ton of money doing it. I think that's fantastic. It is up to you to report how much money you made, how much money you lost, so we can come up with that net number. And so if you have a coin that's done extremely well, you may have another one that hasn't done so hot. We might want to sell that one to exercise those losses to offset some of those gains you got right there. And so that's harvesting capital gains. Charitable donations. We might want to look at this right here. So a lot of people don't realize donations to charities can be tax deductible as either an itemized deduction, or they also have things out there called a donor advised fund, which is really neat because if you are a W-2 employee and you're having a banner year, making a ton of money for whatever reason, we think that's fantastic. You might want to do a charitable donation, but you don't exactly know which organization you want to donate it to, or you might not want to do like a really large donation to just one organization. They have things out there called donor advised funds where you can donate a large amount to this donor advised fund in 1 year to take the tax deductions on it. Interesting part with there is it doesn't all have to go to one organization, and it doesn't even have to go to one organization over the period of 1 year. It can go to multiple different organizations over a period of time. And so that's something to look at right there, is a donor advised fund. An HSA, if your employer offers this, we always, if it makes sense, you do have to have a high deductible healthcare plan to be able to qualify for it. But if you do qualify, a lot of people don't realize you can put $4,150 in an HSA if you're single. If you have a family, you can put over $8,000 in there. And one of the interesting things about those is those funds can roll over. So you don't have to use them all in the year that you put them in there. We've seen clients with those rolling over for years and years. It can actually add up to a pretty substantial amount in there. From there, SALT deductions is state and local tax deductions. So if you own your home, more than likely, we're going to be itemizing your deductions. And so there is an opportunity if you wanted to prepay some of your house taxes for the next year and it made sense, we could do that to give you a little bit more of an itemized deduction right there. The thing to be aware of and to be conscious of is the amount of real estate taxes you can take a deduction for in 1 year is capped at $10,000. So if you wanted to prepay the whole thing because it made sense, that would be great. Just keep in mind, if it is over $10,000 for the year, the amount that you get credit for as a deduction is capped at that amount. So from there, we talk about FSA, which is a flexible spending arrangement. A lot of people are familiar with HSAs when we talk about those. Not so many people have heard of an FSA. It's a similar to an HSA, but it's a little bit different of an arrangement. They call it a flexible spending arrangement for that reason. You don't have to have a high deductible healthcare plan, and you can spend those funds on different things in the healthcare world. So if your employer offers those, always a good idea to look into that right there. And then last but certainly not least, on the individual side, review your withholdings. So this is one thing although it may be a little too late to do something about it, if you're a W-2 employee and out of your W-2 paychecks all year, your employer hasn't been withholding the accurate amount for whatever reason, you're going to be responsible for that when we go to file your taxes. And so if you look at your most recent pay stub, we always want you to review your withholdings so you know kind of exactly where you stand. And so just a quick example, if you've made $300,000 in W-2 wages this year, and in the withholding box, they've only withheld $10,000, that's probably a little light. You're probably going to owe some money when it comes next year when we file your taxes. And so you could always make an extra contribution to there prior to year end if you wanted to. But a lot of times it's really just from an awareness standpoint of, hey, we don't want this to keep happening. We want to know what's going on. You're probably going to need to communicate with your employer and change those withholdings to get it into a reasonable level so you're not caught off guard at the end of the year. So that's a little bit on the individual side. We talk about the business side. You want to have clean books and records, right? I don't ever want to say harp on this, but I can't harp on this enough. You want to have clean books and records on an ongoing basis for multiple reasons, right? For this perspective, it's so we can be ready to file your tax return, but for just an overall running your business and understanding how much money's coming in, how much money's going out, and like really understanding your cash flow, you want to have clean books and records. And so ideally you're using QuickBooks Online or some sort of software. We do have clients that use very fancy spreadsheets, and if that works for them, that's great. But we typically recommend using some sort of accounting software so you can be as accurate as possible with that. Retirement plans. So similar to on the individual side. However, on the business side, there's a little bit more flexibility. A lot of business owners don't know this, but if you own a business and you and your spouse work in the business together and you're the only employees of said business, you can actually qualify for what's called like a solo 401k plan, where the contribution limits to this, you can actually put up to $68,000 per year per person into these accounts. And that money is now a deduction from your business, and it's building tax-free in a retirement plan for you. So if you're a business owner, we definitely recommend setting up some sort of retirement plan. These are just a couple of them that are out there. We typically recommend the ones that have the higher limits, so you can be offsetting more money that you're paying taxes on in that current year. And so solo 401k is great if you qualify. There's another one called a SEP, which is a simplified employee pension. This one has the same higher limits as the solo 401k plan. However, there's a little bit more calculations we have to do, because you have to be paying yourself a pretty high salary to be able to max out those SEPs. Those can be great opportunities though as well. There's also what's called a simple IRA, which is a simplified employee pension plan. These are really nice right here because you can put up to $16,000 into those accounts. And then of course there's a traditional IRA that you could put $7,000 in. But if we got the end of the year coming up and we've had a great year and we're looking for different places to spend some of that money, retirement plan is absolutely going to be one of our go-tos. If your business has inventory, let's review that inventory. You could have things that are obsolete or that are unsold. A lot of times we'll do this when we go to file the tax return, but the time to be having these conversations is now, right? Prior to year end, so we know. A lot of times this can make quite a big difference in the net numbers that we're dealing with prior to year end. So we may be able to do like some cost of goods adjustments there. If you have inventory that's obsolete or that's unsold. Travel expenses. Is there anything for next year that we could prepay, right? Do we have like 4 or 5 conferences already set up that we're going to go to? If we're having a good year this year, we already know that we're going to have the expenses next year. We could always book those trips in advance. And the whole name of the game here is we're trying to lower that overall taxable income as much as possible. If you have employees, if it's appropriate, right? Are we offering employee bonuses? So this is a good one right here. It's basically going to be run through your payroll as a payroll expense, but this time of year, everyone loves to get recognized for their hard work. Every employee always loves to receive a bonus, and then us as the business owner, we always love to pay less taxes on there too. So that's always a good one, something to consider. Home office. This is something we get a lot of questions on right here, and so if you had a home office, the rule with it is you got to have a separate area exclusively used for business. So it can't be like your dining room table where, once the kids go to bed, you open up the laptop and you get to work. Can't be the corner of your living room. It's got to be a separate area. It's got to be exclusively used for business to qualify. And if you do, we come up with what's called a home office business use percentage for the home office. And so we do that by taking the square footage of the home office divided by the square footage of the entire house, and we come up with a percentage. It's usually somewhere between like 8 and 12%. Sometimes it's a little bit more, sometimes it's a little bit less. But a lot of people don't realize that we can then take that percentage of rent if you're renting the space, your mortgage interest and real estate taxes if you own the property, as long as we're not deducting them somewhere else as an itemized deduction, utilities, improvements, all sorts of different things, furniture that we put in there. If you need to do any updates to the space, I bring this up because this is one that won't necessarily show up in your P&L if you're a business owner and you're utilizing QuickBooks and you have it synced with your business bank account. These are going to be separate expenses that we're going to journal in when we do the actual tax return itself. And so just some things to keep the mind working and make sure we capture everything. Asset purchases. Is there any assets we need to purchase prior to year end? Do we need new computers? Do we need new office furniture? Maybe new artwork for the office? These are the kind of things that if you've had a good year this year, maybe it'll make sense to purchase them prior to the end of the year so we can lower that taxable income. So a lot of times we can depreciate that stuff. So is there any way to defer income and accelerate expenses? So perfect example here is, let's say you have a vendor. So it'd be a great problem to have, but let's say you have a vendor that owes you $100,000 for a job that just got completed, but you're already having this breakout banner year, right? Maybe it makes sense to have a conversation with them and delay that payment till next year, right? So if there's a way we can defer income while accelerating expenses, so if we're collecting less income this year, but we're writing off more expenses, like our travel expenses for next year, these assets that we're purchasing, our home office expense, maybe doing some things with inventory, we can start to create a really cool dynamic where we're doing our best with the numbers there. And so last but certainly not least, one of my personal favorites, near and dear to my heart. This is section 179. So has to do with vehicle expenses here. If you if you have a vehicle and it's used for more than 50% business use and it weighs over 6,000 pounds, it can qualify for Internal Revenue Code section 179 deduction. And so what section 179 says, and this is in 2024, you can actually take a deduction for up to 60% of the full value of that vehicle, even though you may still be making payments on the vehicle. You don't have to pay cash for it, or you don't have to pay off the loan to be able to take those deductions. You can actually take those larger deductions right up front there too. And so the question we always get on that one is, hey, what if we buy a vehicle, or what if we have a vehicle and it doesn't weigh over 6,000 pounds? At the end of the day, that's okay. The deduction might not be quite as high, but there's still some things we can do with bonus depreciation to be able to take that deduction there too. And so we tell business owners at the end of the year, hey, don't just go buying a new vehicle because you're getting the tax deduction. However, if we have a vehicle that you've used throughout the year for business purposes and it's more than 50% business usage, we could book that vehicle as an asset of the business. Or if you're planning on buying a new vehicle anyway, let's look at how we can make that qualify and we can get the best deduction possible there for you too. And so moving right along, that brings us to, and I see we had some other people here join in. Thank you so much for joining us. Make sure if you guys do have questions, you're putting them in that Q&A box there. If you try to use the chat, it'll probably tell you that it's disabled, it's not broken. We do the Q&A box for a reason. So if anyone has any questions about this stuff, please feel free to chime them in there, or you can wait to the end because we've got plenty of time there as well. And so that's a little bit on the business side. From there, we go into some advanced strategies. And so it's real interesting, right? Like tax planning, this is what we do. We have a whole department dedicated to just this. It's really about being proactive, not reactive. We always, and we probably always will, do one of these year-end planning sessions, but it's a little bit ironic to me because when we do get to this time of the year, there's only so many things that we can do, right? Because it has to have already happened throughout the course of the year, or you've got 10 or 15 days or whatever it is left in the rest of the year to actually make it work. True tax planning, where we're proactively going to be saving as much as possible, is done on a proactive basis. And so these are some of the advanced strategies right here that would fall into that column. You wouldn't necessarily be able to go back and retroactively claim them this year unless you happen to already do some of them or execute some of them. That would be great. But one's called the Augusta rule. This is, a lot of people aren't familiar, but it's Internal Revenue Code section 280A says if you own your home, you can actually rent your home out for up to 14 days per year. And the income derived from that activity is tax-free to you as a homeowner. So you could literally like rent your house out on Airbnb or VRBO or one of those sites if you were going to be out of town, or we've seen it when there's like a big sporting event or some sort of event coming into town close to where you live, you may be able to rent your house out for exorbitant amounts of income. If you do it for under 14 days, that money is tax-free to you as a homeowner. So if you own a business where this can apply to you, there is your business can actually rent your home from you for up to 14 days per year. You have to charge in line with going market rates. It has to be to host an actual business activity. And if you do, the business can then pay you rent for the space. That money is a deduction from your business and it's tax-free to you as a homeowner over there. And you can do this up to 14 times per year. And so we tell clients to think about things like networking events, marketing events, company trainings, company holiday parties. We did one of those for our company at my house a few years ago, and it was great. So just something to think a little bit outside of the box. Hire your children. This is one a lot of people aren't aware of, but if you do own a business, your children can actually work for you in the business. They have to provide an actual service, so they have to actually do some sort of work. You have to pay them in line with going market rates, but if you do, you can pay them up to $14,600 per year per child. And that money is now a deduction from the business. And if that's their only income, it's tax-free to them as the children. And so these are just some things to get the kind of creative juices going, working forward, and some proactive stuff to think about next year. Another one, fringe benefits for your business. So if your business is growing and is doing very well, you might want to look at offering some fringe benefits to employees. So things like health insurance plan, FSAs, HSAs, some of those things I was talking about earlier on the employee side of things. If you offer those benefits through your own business, it's definitely going to help with employee retention, employee morale, right? All those sort of things. But then it's also an amazing tax deduction too. So if you're looking at offering a better overall employee package, fringe benefits are definitely the way to go. Cost segregation, if you own commercial property, or you're considering purchasing like a short-term rental property, is becoming increasingly more and more popular over the years. You might want to look at doing what's called a cost segregation study. So this is where essentially hire a company to do a study on the property, and they go in and essentially pick out all of the assets and list them individually, as opposed to as one big asset, to allow you to take depreciation faster on everything and essentially take deductions on that property sooner than later. So that's a very simplified justification or explanation of what cost segregation is, but those can be amazing if you have commercial property or if you own a short-term rental property. Then leverage investments. This is a big one right here. So a lot of people don't realize this is really popular in the medical industry. It's really popular in the world of artwork, even like land conservation. There's several different industries where this stuff is really popular, but call them leveraged investments. It's where you can make an investment or a donation to an organization at the cost of what it costs them to make their products, but because of their status and the way they're set up with the IRS, you can actually get credit back for a much higher value. And so, currently, just to kind of give an example of this, we have a relationship with a vendor in the medical services industry where you could make a donation to their organization at their cost to make this medical equipment. You actually get credit back on the form of a donation for 5 times the original investment that you put in. So essentially giving you a much bigger charitable donation on your tax return. These can be very creative ways to save a lot of money on taxes, especially if you're in those higher tax brackets like the 35 and the 37% there. So definitely something to look at. I always like to, and we're about to wrap it up here too. I've been talking the whole time. I could talk about this stuff for hours, but if you guys do have some questions, type them in there. We'll kind of bring it in for a landing here in just a minute. But I always like to bring up this quote close to the end here. This is a quote from Judge Billings Learned Hand, who was a United States Court of Appeals judge back in 1934, and he's famous for this quote in our world. He said, "Anyone may so arrange his affairs so that his taxes can be as low as possible. He's not bound to choose the pattern which best pays the Treasury. There's not even a patriotic duty to increase one's taxes." And so I love talking about this because it lets you know that this stuff is okay. Like positioning yourself in a way to pay the least amount of taxes. At the end of the day, there's absolutely nothing wrong with that, and the courts have ruled on these types of opinions over and over that it's okay to structure our affairs in a way that's going to save you money. So there's no patriotic duty to pay more taxes. I think a lot of people are under the agreement that we can typically do a lot better things with our money than the federal government can. And so you don't want to give them any more than you have to. At the end of the day, the tax code is really written for business owners. We do say that. And so the reason it is because like 2/3 of all new jobs in the US are created by small businesses. It's like up to 40% of economic activity is actually attributed to small biz. And when you really understand what the IRS is, to me, this is really important. At the end of the day, the IRS they're just a debt collection agency. They're the biggest, most powerful one in the world. So you don't want to mess with them, right? But at the end of the day, they're bill collectors. Their job is to collect money. Your job is to minimize the amount that you give them. And you do it by proactively doing all of these strategies that we've gone through here with you today, and many more that we can dive into on more of a one-on-one basis. And so if you're out there and you're asking yourself, hey, what if I don't own a business? I'm just an employee. That's okay. There's nothing that says you can't start a business, right? You could always have a side business, or if you are an employee and you don't have a business, I would just maximize as many of those employer offered benefits as humanly possible, like the retirement plan contributions, HFA, HSAs, FSAs, all of that stuff that we were going through there. And so at the end of the day, you want to have a plan, right? You don't want to wait until the last minute. I applaud everybody who joined this webinar because you're being proactive about it. That's what we love to do here, and we love to work with people proactively on this stuff. But at the end of the day, you need a plan, right? That's what we love to do, is put plans in place for our clients and then help them work through all the implementation of all these strategies and everything into their life as well. And so if you did want to book a call and talk to somebody on our team, you can always go to our website, which once again is actionaccountingusa.com. Right here on that front page is book an appointment, and that'll take you right to the calendar where you can book some time to talk to somebody about your specific situation, and we can help you out with this stuff. So that's really all I had for you guys today. Once again, I appreciate you joining and chiming in. If you got some questions, now's the time to ask them. I always jokingly say, if nobody has any questions, I just take that as the utmost compliment, because that means I covered all of this stuff so concisely and precisely that nobody could possibly have any questions about it. And so I'm going to take a quick sip of water. If you do have a question, type it in there. We'd love to hear it. Please stick around. I'll hang out for a few more minutes here, and then after that, we'll give everybody some time back in their day. Jose says, what documentation should we be tracking throughout the year? So great question. It depends, right? So if you're a W-2 employee, then your employer is going to send you the W-2. There's really not much you have to be tracking throughout the year. If you're a business owner, I'd recommend tracking your income and your expenses. So I'll show you right here. If you don't have like a good software setup or spreadsheet system, if you go to our website and you go to the resources tab, you go right here to tax documents, several different items right here. So we have what's called this business expense form, where this is a very simple way to track your income and expenses from your business throughout the year. Hopefully you can see this on my screen. So this is about, as straightforward as it gets right here. You want to put your business name, how much money you brought in, what tax year we're talking, and then literally just total everything up in these boxes right here. So if it's for business, you want to be filling these out on a somewhat regular basis, or have enough things in place where you can total it up at the end of the year. If you have, I always like showing these here. If you do have rental properties, or interested in the short-term rental, kind of like I was talking earlier, there's another one for rent and royalty income. So it's same concepts, basically income and expenses is what we want to track on a regular basis, but they're categorized a little bit differently, just depending on exactly kind of activity it is. Now it's taking a second here. If it doesn't crash my whole computer trying to open that up, but it's basically, if you go to the website there, it'll bring that up, and it's a nice little Excel version of rental expenses for you there. So other than that, hopefully that answers your question, Jose. If you got more, feel free to type it in there. We'll answer that. Kevin asked, what's the max for solo 401k? So the max is 68,000. And the way that breaks down is 23,000 from the employee side, which is you personally. The rest can be up to 25% of the company profit for the year. So factoring that in, the 23 plus 20 up to 25% of the company profit combined with those two numbers can be up to 68,000. Hopefully that answers that. If anyone else has any questions, type them in there. We'll be happy to answer those. If not, we'll wrap up here. We'll give everybody back a few minutes in their day. So. Jose said, how should we structure our withholdings to avoid owing a large sum as W-2 only employees? So this is kind of what I was mentioning earlier of you want to make sure they're withholding a certain amount. The simple days of that changed back in 2018 when they did the Tax Cuts and Jobs Act. And so you used to be able to just give them a number. It was like you could claim 0 or claim 1. Now it's a little bit different where I would really go by a percentage. If you're depending on your level of income, I would recommend you have at least like 10% withholdings coming out of your W-2 paycheck on a yearly basis. So hopefully that answers that. Simpler times, that's right. It was. And so, yeah, but on average, if you have about 10% withholdings, is typically pretty good. That's when you're under, say, 250,000 per year or so. If your W-2 income is getting over that, probably want to increase it by a few percentage every 20 or 30,000 increments to kind of keep up with it. Because as your income grows, so does the tax bracket that you're in. The IRS is very nice like that. So those are great questions. Thank you guys for joining. If anybody has any else, feel free to type them in there. If not, I'll stick around for another minute or two. Then we'll cut this off and give everybody a little bit more time back in their day here. So if you got any questions, pop them in the Q&A box and we would love to answer those. This is also recorded, so we will send it out to everybody who joined, and everybody who registered and didn't get to join for whatever reason too, will be sending you this copy. Hopefully you find some value in it. And if you do, please feel free to join us. We do these every month on a different topic. This year, obviously, just because of the time of year, was year-end tax topics, how we can get cleaned up, how we can get everything ready for year-end. But throughout the year, we'll talk about different topics that are pertinent throughout the time frame of the course of the year. And a lot of times we'll bring on guests as well for other type of business related topics to bring value to everyone as well. As much as I love to do these and talk the whole time, we've realized if we bring on guests and visitors, it's a lot more interactive and typically people get a lot more out of it too. So thanks, Jose. Appreciate the kind words there. We really appreciate it. We'll talk with you soon. You go to our website, you can book an appointment. So that would be great whenever you're ready to talk. All right, I am gonna take a break here. So if there's no more questions, we'll cut this off. Thank you so much. Happy holidays, everybody. I really appreciate you tuning in, and we'll talk to y'all soon. See ya.